Hey, everybody. You made it. We're at the end of the week. It's time for Market Movers. My name is Brent Moores. I'm sitting in for Ben Watson. He's out at a workshop right now, but you know what? Glad you're here. Glad to be joined by Scott Thompson in the chat too. So between Scott and I, we'll try and keep our eye on the chat and help you out. I've known Scott many, many years and worked with him, and he's very knowledgeable in all this stuff. So feel free to type in questions. You can follow me on X at Brent Moore CS there. And let's hit up the disclosures real quick, and then we'll move on to the reason that you are here. The information, though, is for general informational purposes only. It's not an individual recommendation of any security strategy or chart type. These aren't recommendations, although we will look at specific securities. I'm not planning on dealing with options today, so I'm going to skip that. But just remember, the Paper Money software application is provided for educational purposes only. Past performance is no guarantee of future results. Schwab does not recommend the use of technical analysis. Analysis is the sole means of investment research. And all investing involves risks, including loss of principal. And there's no guarantee of an execution of a stop loss at or near the activation price. I see some familiar names, and it's always good to see you guys. You guys feel like family to me, and I just appreciate you out there. And if you're new, we love you as well. If you're watching on recording, that's great too. What are we going to do today? We're going to look at the general trend of major market indices, what moved the market this week, and how portfolios, how is your portfolio impacted? Well, you know, everybody's portfolio is different on this, but let me mention something regarding this class before I get too far into this. And that is, this class is going to be shifting times, not next week, but starting the week after. This class is going to be taught this webcast is going to be taught at 3 o'clock Eastern time, not 4 o'clock Eastern time. So next week, same time. Week after, we're doing a few little jiggering of the schedule there, little shifting of the schedule. And most classes really aren't affected, but this is one that is. It's just moving up an hour during the week. Okay. All righty. So let's take a look at the Thinkorswim desktop software. This is the S&P 500. You can see. Well, I guess that's where we ended, basically break even, down 0.01% there, not much of anything. That's the wrap for the month, everybody, though. And you can see for May, we've actually had a pretty nice performance for May. If I go back to May 1st to now, actually I'll go to the end, last day, the closing price of the end of April to right now, closing price up about 6% on the S&P 500. So, hey, that's nothing to sneeze at. And, you know, every month is not going to be that way. But in terms of just like technical analysis, and remember, you know, technical analysis is not the sole means of investment research. But what I would say is this. I have a 50-day moving average in blue. I have a 20-day moving average in red. The index has been trending up. And support, probably about here is where I'd call support. Bouncing off there, we gapped up to this level. In fact, I've extended it. I didn't extend. I should have extended this here. What you'll see is, I think, we kissed it perfectly there and kissed it there. Came up, we gapped above that, using this now as support, bounced off that. That's the confirmation a lot of people like to see. Now, I don't know where it's going, but kind of next kind of logical resistance levels that we could potentially face. This seems to be kind of like a significant level there on that. So there's that. Now, if we look at the NASDAQ, I don't want to, you know, spend too much time on the S&P 500, but the NASDAQ, a little more tech oriented. Same kind of deal. Here's your support level. We're still above our 20-day. We're still above our 50-day moving average, a little bit more sideways, although this recent high was a little bit higher than the last one. So we'll see if that continues. Higher highs, higher lows along the way, folks. That is bullish. And even small caps, here's the Russell 2000, have had that similar upward trend, similar levels that you can look at for for potential trend. Holding that 20-day for now. Hey, you know what? We're joined by everybody. It's not just you, it's people, a lot of people in Anaheim. The Anaheim Advanced Options Workshop is here right now. We welcome you. You guys are in good hands with Ben out there and the rest of the crew. We appreciate you. Make sure you join. You know, this webcast actually is taught by Ben most weeks. So those of you sitting in Anaheim, if you want to get a good wrap up of the week with Ben Watson, join this each week and all our other webcasts as well. So glad you guys have joined us. Now, let's move on. Here's what I want to do. I want to move beyond the basic indices that we've been looking at. And I want to look at just kind of like market breadth here for a sec. Okay? Market breadth. In other words, this index right here, $SPX A50R, is the percentage of companies in the S&P 500 that are above their 50-day moving average. Because do you know that S&P 500 is dominated by not that many stocks? You know, you get the Mag 7 you've heard of, and those large cap stocks really dominate the 500 stocks in the S&P 500. This tells you the percentage of those S&P 500 stocks that are above their 50-day moving average, almost 70% right now. So that's significant, and that shows widespread participation in the market as a whole right now. And if you wanted to, you can change that to 100-day. How many are above their 100-day moving average or their 200-day moving average? And let me just shift that 50 to 200. We'll just look at that. Not as many above that 200, about half. That just shows the depth of the drop that we had in the markets before there. Okay. All right. So that is that's kind of a measure of breadth there that we're looking at on the markets. But what's going to affect the market coming up? Well, and what has been affecting the market coming up? One thing that affects the market significantly is interest rates. Interest rates. Now, Beauty at its Best said, can you do the market breadth not in the same way with that ticker symbol? I don't have a ticker symbol for you, Beauty at its breadth, Beauty at its Best there for you on that. But you'd have to kind of delve into the sectors themselves to do that. Let's move forward though and talk about interest rates here for a sec, because right now one of the concerns in the market right now are interest rates. I'm going to start with the 10-year yield. Now you got to divide this number by 10 to actually get the yield. So about 4.4%. It's actually fallen back a little bit right now. A lot of investors, a lot of the market is concerned about interest rates right now. Because not only is the 10-year not dropping like people want, like a lot of investors like to see, but it can actually look a little worse if you go out further. If I go out further on the yield spectrum to the 30-year, we're up near closer to 5%. So you may be looking at that 10-year rate and go, well, I can deal with this 4.5% or something like that in this range. But if we go up a little bit, it is likely that the 10-year is not only going to go up, but that 30-year is going to go back above 5%. And when the 30-year starts going into, low fives, maybe close to mid fives, a lot of analysts are concerned that that's going to have some pretty negative economic consequences in the market there. Okay, so what's going to happen? What's the future of this? I don't know. There are some concerns with interest rates. And one concern, and I'm not saying this is, the sole cause of interest rates staying high, but one concern is spending. Are we going to get are we going to come up with some cuts in the deficit, ultimately affecting U.S. debt, which I think pretty much is universally agreed to be too high right now and long-term unsustainable. Therefore, what are we going to do about it? Well, right now we have a tax cut that has passed the House. We'll see what the Senate does with it, what comes about in reconciliation between the two, and what ultimately gets passed. But a big question mark is on spending cuts, and that is one. A lot of people are saying this is affecting treasuries. Why would this affect treasuries? Well, think about how treasuries work. These are US bonds. If people are interested in buying US bonds, it drives up the price of bonds. When the price of bonds goes up, yields go down. Well, if fewer people are interested in buying US bonds because of fears of, say, for example, inflation or debt, then fewer people buy US bonds, drives the price of bonds down, and interest rates up. Okay, so that's where that goes. Now, coming up, the Fed will have their say in the matter. Jerome Powell just met with President Trump, I think it was today, in fact, and they talked about it. But let me just mention this in terms of Fed fund rates. Now, just realize when we talk about Fed fund rates, there is not a direct correlation between the Fed fund rate and what, like the 10-year rate or the 30-year rate I was looking at earlier. We can lower the Fed fund rate. It's not necessarily going to touch the 10-year. In fact, last time we had a substantial cut in the Fed funds rate, the long end of the curve actually went up. So we don't know. But anyways, next opportunity, scheduled opportunity, is June 18th. But these are just probabilities. This is a CME FedWatch tool, which looks at Fed fund futures to get an idea of what the market is expecting in terms of interest rates. Roughly 95% chance sitting put on June 18th. And if you go out in time, it lowers a little bit. When you go to September, you can see, well, the market actually right now is pricing a cut in December. That's the first time we're pricing a cut in there. Now, this can absolutely change. And we've seen this over the past year, huge changes in the market there. Okay, in what the discrepancy, the disparity between what is the market is predicting for Fed funds and what the Fed is going to do versus what the Fed actually does. Because as they've said all along, they're kind of data dependent. Now, let's move forward. Let's look at some other things that aren't necessarily equities in the market, but are part of the market to consider. One is oil. Let's look at the price of oil right now. So OPEC Plus is meeting this weekend, tomorrow, Saturday. And the expectation is that they're going to increase output, okay? And so that more output would tend to soften oil prices. Now, oil prices, just like other commodities, but oil prices are driven more by expectation of the future than what has happened in the past. And so if the expectation is OPEC is going to keep the taps open, so to speak, then it's not surprising that oil prices have gone down. Now, that is talking about the supply side of the equation. Whenever we talk about oil, remember there's a supply end and there's a demand end. Supply is running freely, it seems like, and that is putting downward pressure on oil prices. Demand, a lot of concern economically, worldwide. It's not just U.S. demand, it's international demand. On the demand side, concerned about economic growth. That tends to keep oil prices down. Hence, we have oil prices near $60. That's actually pretty low. In fact, if you look back, we can look back at a longer term chart here. let's do this. Let's go to like let me go to like a 10-year chart here. Okay. So here's a 10-year chart on oil. You can see, yeah, we had it doesn't go back a full 10 years, but kind of COVID time period, it got knocked down at COVID, climbed its way up, but oil is actually down from like over the last 3 years. So I don't know if that trend is going to change anytime soon. One thing with oil, though, just to remember is with oil, the lower the price goes, the more potential, people that it takes some producers out of the supply chain there, because it becomes, if it gets too low a price, some places, not like Saudi Arabia that can produce a barrel of oil for uber cheap compared to most countries, but certain other sources, they start to drop out. So there is kind of a self-correcting mechanism, so to speak, in oil prices there. Okay, so let's move on. So that's oil. Let's go to gold. Gold is kind of an area where people will. Wiley in the chat is commenting on oil in gas prices in California, and just of course a reminder: you're not putting crude oil in your car, right? There's a refining process that is going to gives you a difference between crude oil prices, and the price of the refined product, which is gasoline. And then you also have other things like taxes, which can affect the price at the pump as well. So even though oil has gone down, I mean, even here where I live, I'm not in California, oil doesn't seem to be going down anywhere right now. So there you go. But here's gold. Gold, with a lot of anxiety in the market, gold really got bought up. Maybe is this a sign, the fact that we've kind of flattened out our trend where we had higher highs and higher lows? Here were higher highs along the way. Well, now we had an equal high. We've actually kind of looks like we're forming a lower high. Here's a low, here's a lower low, maybe a little bit higher. But anyway, this is kind of where we're at right now on oil. Certainly some softening, not oil, gold. There's certainly some softening in the trend versus what we see. Well, maybe that's a good economic sign, to be honest, because maybe people are a little bit less worried, less skittish economically. There's still a lot of uncertainty in the markets right now. A lot of it has to do with tariffs and trade. We've had this kind of roller coaster over the past few days here in terms of that. Yesterday, the U.S., what's it called? The Court of International Trade, I think it's called, struck down some of the tariffs that were implemented, and then the administration appealed that to U.S. Court of Appeals, and they reinstated the tariffs. I'll be the first one to admit I am no expert on tariff policy, what the future is going to be, particularly regarding the laws, regarding implementation, or what the course it's going to take in terms of the courts. So I'm just going to stay out of that, any speculation in that regard. What I will say is there's a lot of uncertainty. You guys have all felt it, and the market is feeling it. And that is one reason why when we look at things like the VIX, it's not low. It's a lot better than where it was, but at about 18.5, it's reflecting an undercurrent, we'll say, of uncertainty in the market. Now, here's what I want to do. I want to head on over to the Schwab.com website here. I got to type in my password real quick. One sec. And bring that up because it logged me out because it had been sitting for a while. And I want to just talk about economics and what we got here. So let's pull this down and let me show you where I'm going on this page for those of you who are interested in economic data on schwab.com. And so I'm going to click on research. I'm going to click on US markets, and I'm going to scroll down on the right side of the page. It has calendar, and we're going to go to the economic calendar. Okay. So let's talk about this past week that we've had and then the week ahead in terms of this. So right now on Tuesday of this week, so it was a shortened week. Monday there was nada there. We had actually, a few things of note, I think, that stuck out. One was the consumer confidence. Now, that is not the most important report out there, that consumer confidence level, but actually the reading was actually kind of surprisingly good there in terms of that. This is the Conference Board there's different consumer confidence gauges out. This is Conference Board, but it was actually a surprisingly high number. Now, that's not as I mentioned, it's not the most important indicator out there. Well, also we had durable goods orders that came in and actually outperformed a little bit, a drop of 6.3% as compared to like a forecast, which was a bigger drop. So we'll call that a positive as well. Not the most important, but it's, that's a significant report there. I'm not going to talk about all our reports, but let me just mention this. House price indexes, housing prices are still sticking relatively high. Pending home sales have gone down. You can see that on Thursday. There are a lot more sellers than buyers nationwide. We'll see if that really significantly, it's starting to regionally in some places affect housing prices. But nationwide housing prices still, by most measures, I think are still fairly high. And then today, kind of the big report was the PCE, particularly the core PCE, that's the inflation. That's kind of the Fed's preferred inflation gauge, right in line. Okay. So no surprises there. The general trend has been coming down on that. The question on that, though, is when all the full effects of tariffs are seen, how is that going to be affected? We don't know yet. I don't know. I could speculate. I hear a lot of people speculating on it. I just don't know. But that is a concern on the market right now. We'll just have to see on that. Now, next week, what's on the docket for next week? Let's see. Next week, we're into June. And let me just point out some of the more. The ISM Manufacturing Index would be kind of a significant thing. Another thing that's not listed here is Jerome Powell will be speaking on Monday. That could certainly move the market. JOLTS, it's not the most important thing out there, but that has potential to move the market. ISM Services, another kind of bigger type reading that we often look at. But really, the biggest items next week that are likely to move the market are on Fridays. On Friday, we have non-farm payroll reports, the unemployment rate. This is the monthly report. This comes out, and this is kind of a bigger one. And then another one that maybe is a little bit more concern right now is that average hourly earnings. Okay. And you know what, David in the chat pointed out the personal income that came out. That was a big beat on personal income. I probably should have mentioned that. I think I read right through that there when I was up higher on the page. But that's a good one there, David. Thank you. Personal income beat much higher. Now, there can be a concern, though, like here with this averagely hourly earnings. Well, of course, we all want to make more money. That's great. But this can be considered kind of a leading indicator for inflation. So that a positive number, a big positive number there could negatively affect the markets there. I know that sounds kind of weird. Now, let's head on back over to the Thinkorswim platform because we're going to be running out of time here before too long. Earnings. There were a few companies that had earnings this week. And one thing I would just like to point out to you, let's pull up CRM. Okay, so this is Salesforce. They had earnings. You can see the reaction. The company dropped there. And, the earnings was, I think, okay. The guidance, as often is the case, was not so good. So a little bit mixed, but the market certainly fell on that. One way to look at this is you can go to the live news, and if you link it, it makes it easy. Just here I have orange 7. You can do whatever color number combination you want, but then whatever company you bring up, it will show you the news relevant to that, and then you can see, oh, why did Salesforce drop on that earnings? You can scroll down and look at those news stories, and you can see price target changes and whatnot on that. The biggest earnings report of the week, though, and in fact, the biggest we've had in a few weeks here, I think, is NVIDIA. Okay, so NVIDIA came out 2 days ago, after the market 2 days ago. And you know what? We gapped up and we're back basically to where we were before the earnings at that point. And so here's the thing with NVIDIA. So they cited issues. There's pros and cons with NVIDIA. It was a little mixed. I think it was generally considered to be fairly positive. NVIDIA has these H20 chips there. And the U.S. export controls, I don't understand all the regulation on that, but are limiting the sales of those to China, okay? And what they said in their call was that affected their, I guess it would be top line, at least, to the tune of $8 billion. Well, I think $8 billion is nothing to sneeze at. But they've actually made up to it. They've done well other than that. Basically the message from them is we're not just a one-trick pony of giving China, selling chips to China. We're actually doing well throughout the world, and our revenue was up 69% year over year. So that was part of the positive move up. Well, today we lost a lot of it, but there you go. That was NVIDIA earnings. Now, NVIDIA is obviously in that chip space. Another company in that in the chip space, is Marvell, which came out last night. Again, a little bit of a drop. The results were in line. Results were in line for Marvell. One other earnings that I wanted to point out here is Costco. This came out last night, but I want to point out something to you. I want to pull up an intraday chart and show you because it was kind of a peculiar thing. Earnings came out here, and this is maybe a caution a little bit on like doing after hours trading. Sometimes you don't know what it's going to do. Here's earnings came out. Here's the extended market hours. If I judge this right here at market open, I'm all, so-so. What happened soon after? Market today, we skyrocketed up after the market opened. Only after the market opened. This was like, 12 hours or more after the earnings actually and the numbers were released. And so there you go, folks. That was earnings. Other companies with earnings. Ulta had earnings. They did well. I'm out of time, so I'm just gonna kind of rapid fire these real quick as we finish up. Here's Ulta. Nice big result on Ulta. Another company that I don't think had earnings, but they announced a buyout of, well, they did have earnings a couple days ago, but they're announcing they are buying out Hailey Bieber's, is that Justin Bieber's wife? Skin care beauty line for $1 billion. Elf Beauty up on that news. And let's see. I think that's it, folks. I hope you all had a wonderful week behind, and I hope you have a wonderful weekend ahead. And I want to thank Scott for helping me out in the chat there. There is a survey link in the chat if you want to fill that out, whereas as we're wrapping up. We always appreciate your feedback here. And and if you join live, we love it because you get some extra humorous comments in the chat sometimes. So that's great there. But everybody have a wonderful weekend ahead, and we will see you all same time next week. Bye-bye, everybody.